Triffany Hammond. I am a support and resistance trader. I trade mainly price action, and what I like to do is drill down from longer term time frames to the time frame that I like to trade. For me, that's daily to 4 hour to 1 hour. For you, that might be 1 hour to 30 minutes, 15 minutes. The idea is, though, taking price action, stepping back from the price or from the time frame that you trade and putting it into a larger context so that price action actually has some kind of meaning. I just picked the pound dollar today because there's been lots of activity on it. Looks like a good one to talk about. It's at kind of some significant levels in terms of decision making for the market. So we're going to go ahead and start here. Now, like I said, I start with the daily. I move down to the 4 hour, then down to the 1 hour. So what you're looking at here is the pound dollar daily chart. And I'm seeing a lot of conversation actually going on about how people aren't trading. I have some trades open, from when I was trading last week, but I'm not trading this week either. I'm not looking at new setups. I'm not looking at anything that I want. I'm not even adding to my positions from last week. And this is my week off, my time with my kids, my time to rejuvenate before the new year. And, all of those personal reasons are important to consider, but as the conversation is kind of in the comments as well, what's really important to remember here too is that the week between Christmas and New Year is traditionally a really interesting time to trade. We have a tendency to think that low volume means low activity, and that's not necessarily the case. You can get a lot of false signals, a lot of false starts in this week because the volume being low actually adds to the volatility. When you have fewer players with all that big money, you can really get a lot of whipsaw effect. And about the time you're ready to jump on board, man, the move is over and you find yourself on the wrong side of the trade a lot of the times. And I know from my own personal trading history that this has just been a really difficult time for me to make profit. So I just take the time off, Why not take a vacation, especially when it's a bad time to trade? So I'm glad to see that the conversation is really one of practicality, that nobody's feeling like they have to trade. I think one of the things that happens to us as traders is we feel like we constantly have to have a trade on. And I think some of that is driven by, the nature of the market, because there's something always going on. You feel like you're missing out on something. There's constant movement. But it's nice to see that there's some pragmatism out there that, if it's not a good time to trade, don't trade. You don't force anything. And every single time you force a trade, you'll end up on the losing side in some regard, if not in regard to your profit, certainly in regard to your emotions. Because, forcing a trade really engages you in an unhealthy way mentally and emotionally when you're trading. So just be really cognizant of that and aware in your trading. Yeah, sounds like Tom's been there. Tom says, amen. Yeah, you just don't want to do that. You really don't. So, okay, back to the chart. What's interesting about what's going on with the pound right now, we have had a lot of activity in today's trading session, but once we pull back and we can see it in this larger context, what we're really seeing is that we're at the bottom of this larger area of indecision. And every single time that we've been down here before, we have seen price rejection. It went from price rejection to some indecision, maybe, and now we're right back down into that larger area of indecision, or this is the larger area, that interim area of indecision. The nice thing about identifying this area is that we get to really make a choice about the levels that we choose to identify in terms of price. Because what we're seeing, right now we're in an area of indecision. We probably don't want to play any kind of channel trading in here unless you're doing really short-term stuff. Simply because if it's undecided while it's in this price range, we're not really going to get any kind of clear momentum behind the trade. We're not going to really have a bandwagon to jump on and become a part of that wave with the market. But the other thing is it really does identify the important levels. What becomes important around these areas of indecision are the resistance and support levels, obviously. If the price is willing to break a significant level that it has broken before, that it was unwilling to break before, that becomes significant to us as traders, and that becomes the bandwagon that we want to jump on and become a part of. Likewise, on the resistance side, even though it's come back down here before, every time it has definitively moved away from this area of decision. It's done so with conviction, right? We get large moves, convicted moves, again, a bandwagon that we get to jump on and be a part of and grab the pips and put in our pocket. That's what we want to do with trading. Now, the other thing I like to do in this larger context is ask myself, okay, if this, then what? If it's going to break support levels, if it's going to come down here and break this area of the support level of this area of indecision, where is it going to go to next? What I find interesting is that we actually have resistance levels back here that when it left its area of indecision back here, it did not come back and retest. Right? Those of you who have been trading for a while, or at least have been coming to my webinars for a while, understand, and I'm constantly talking about this, how when things leave an area, more often than not, they will come back, retest that support or resistance area, and then bounce away from it again. It's a matter of making the trade affordable to the big money that changes hands, right? Big moves, pull the price back, make it affordable to second, third, and fourth positions, other clients, whatever they're doing, and then push the price again. That's the reason why the market moves the way it does, with that push and pull, Well, what we got back here was a really big push, and there was no pull. Price didn't come back and retouch these levels. So automatically, when I start to look at what's going to happen, where is this bandwagon going to go when it leaves this support area? That becomes a really obvious level to me. The nice thing is we actually have another area. You can see here when we move back on the charts just a little bit, this was the area of support and resistance. It left with enthusiasm and didn't come back. We also have an area underneath there that, I could start to sort of look into the future a little bit and say, if I'm picking up momentum, because this downward channel here has really lost momentum, hasn't it? But if momentum picks up again, then I can start to visually see in my head, and again, I wish I had a little drawing tool. I can start to see in my head if this downward movement actually picks up speed and picks up the push and pull behavior that we want to see, we can start to imagine where those levels are going to be as it moves in a convicted direction, right? Because it's been undecided for so long. So it becomes important to me to start to recognize all of those up and coming possibilities. To the long side, immediately above this area of indecision we're in right now, these are areas I call muddy areas, where they're really more support and resistance zones. But we can see here where even at the top of this muddy area at 1.6250, not surprisingly near that 50 mark, right? We can see that would be a nice easy profit target, and then just take our money off the table. If we're going to hit the top of the muddy zone, let it figure out what it's going to do. You can see along this line how traditionally there has been a lot of indecision. If this starts to go long, don't get so excited for the ultimate highs that you hold on and you let winners turn into losers. Identify these areas where the market has shown pause before. Chances are really good it's going to show pause again. Keep these areas in mind. That's why I like to pull out of my charts a little bit and give it a larger context, make it important to me. Let me see what I have for questions, because I see a comment here. Mike says, Triff, I can't believe it. The euro had a breakout. Any chance of having a look at it later? Yeah, we can. I think we'll probably have plenty of time for the euro dollar. Let's take a look at that later. I think that's probably wise. And what you're talking about, Mike, in here is this is that low volume, high volatility conditions that become really difficult to trade. This is the same reason why penny stocks are extremely difficult to trade. I know some people have their wonderful stories about penny stocks and how, they took $100 and they turned it. But what happens when you have, low volume high volatility is that a smaller pool gets to make big decisions, and you don't know how long those decisions are going to last. In normal market conditions, you get to see, as one person kind of pulls out of the trade or pulls the price back, the next person gets in, and there's just this continual flow of volume into the market that kind of keeps the directional movement going that the market has kind of chosen and agreed on. But the fewer hands you have exchanging that money, the price can whipsaw like crazy. And again, that's why I really do not like to trade during these conditions. Tom says, I always take some off at 30 pips on the euro, usually retest the setup. Great. Jerry says he's long the euro yen and the pound dollar. That figures, doesn't it, Jerry? Andre asked a great question. He says, hi, Triff. I see that when you draw your lines, some are on the bodies and some are on the shadows. When do you place the line on each and why? Generally, Andre, what I like to do in the Forex market, what I did in equities is really different. Price seems much more definitive in equities market. In Forex, what I really do is kind of split the difference. And I think one of the areas you're probably asking about is even this support level here. Why would I choose where I put it at 57, 80 something? So even like around the round number, right? Versus grabbing these lower lows. Well, if I grab the extremity here, you can see, and I'm going to put my original line on there, you can see what we're really talking about is one of those muddy areas, right? This is how I define those muddy areas. Those areas where price kind of did something, but it's really hard to define. Generally speaking, if I can grab more bodies with my specific price point, I'd rather have bodies than wicks. But if I get a situation where I have bodies and wicks combined, I usually try to split the difference between the extremities and the bodies themselves, simply because there seems to be a more exact decision at bodies. And when given the choice, I'm going to kind of look for that midpoint where the market seemed to make more of its decisions. I don't know if that makes sense or not. But that's what I've found that works for me. Some people are very specific, always grab the top of the wick, always grab. But in my experience, support and resistance is so much more a zone than it is a specific price point that it makes sense to me to find kind of a middle-of-the-road part of that zone. And generally speaking, I mean, it's usually what happens is my price point usually ends up really close to the psychological numbers at 00 and 50. So it usually works out pretty well. Does that make sense, Andre? It's a great question. It really is. And this is one of those conversations related to order flow in the market. Yes, exactly. This is one of those conversations that really becomes important because, somebody that comes on after me in one of these webinars might say something that is, less, what am I trying to say? They might say something that's more defined. They might say, always grab the bodies or always grab the wicks. What's really important, Andre, and what I encourage everyone to do, and those of you who've been here for a while are sick of me saying it, I'm sure, but I can't say it enough, is go ahead and load some historical data on your chart and test it. See what your preferences are. See if you like bodies over wicks, or if you like to kind of take the average in between. See if there's any meaning in the way that your brain recognizes price action and what the difference is between the extremities and the medians are. And the reason why I say that is because what's going to happen in the process of you testing and practicing your trading before actually putting any money on the table is that you're going to make the data more meaningful to yourself. You are going to have better answers in terms of what you're willing to take action on. Because finding a specific price point, I'm going to definitely take a close on a break below this price, is kind of a tricky thing. Your brain is, until you actually develop some experience, you're constantly going to see, yeah, but then there's this other zone that it might bounce off of, and I could be wrong. And you're going to have this whole stack of reasons why you can't take the trade. So rather than do that, build up some experience in your testing and in your your trading practice, right? So that you know what your preferences are and you know what trades you like to take. Ahmed asked another great question. Is this a double top pattern? No, it's not. For a long time, people talked about this as being a potential, back here it was a potential double top. It didn't play out because we didn't get another streak downwards. It actually went sideways, which made the whole thing an ascending triangle. Then when this little formation popped up here, everybody said head and shoulders. Then when this came up here, everybody said triple top. And now that, if you were looking on a weekly chart, it probably looks more like a double top. Let me tell you, Ahmed, why this is not a double top. Once you have price moving upward, we had a very directional movement up into these potential patterns, right? When the first time that double top didn't play out, and it's not like it turned into a triple top right away. The first time we had that indecision come from this directional movement kind of negated any future patterns. A double top is formed out of an uptrend when you get that uptrend movement, a price rejection at resistance, a pullback, and a second price rejection at resistance. Then it's not even a confirmed double top until you get a close below the neckline, which, for me at that time, I was watching this level here. Again, along the conversation of wicks and bodies, I like this level rather than the absolute wick. So a close below that line would have, off of this double top right in here, would have confirmed that this was in fact a reversal pattern. Once that was not confirmed, it becomes a big area of indecision. You can force yourself to see patterns in these larger area of indecisions, but every time that they don't play out, they become less and less important. What is important to recognize, Ahmed, and I'm glad you asked the question because this is really important. When we're talking about recognizing price action, when we're looking at reading price action, it's still okay to look at the potential of, this second price rejection at resistance, right? That sentiment could still be important. But what we're no longer willing to do is look at it as a possible overall trend reversal. What it becomes then is as it rejects price at that resistance level again, it becomes an interim trade as opposed to a long-term trade. But it's still an important difference, yes? I'm glad you asked that. Thank you. It's a fantastic question. Yeah, and once you start looking, you can really see all the different patterns. It says now I see many patterns, and that's it, once you start really looking into it. And you can see how that's what's tricky is, in retrospect, it's very easy to go, well, of course that wasn't a double, that wasn't a head and shoulders. Well, it's easy to see in retrospect, but if you imagine, at the time we're looking at the charts, right here, right? Like here, oh, is that a double top there? It could be. Oh, no, it's not. When it's live time, the analysis becomes quite different. And, having the courage to trust your analysis is what is what becomes tested during the trading process. Let's see. I'm going to go back in the comments here because I'm sure I missed some things. Jerry says, especially this week, it took me out at profit on Euro Yen. Great job, Jerry. That's fantastic. Jeremy asked, if this forms a triple bottom, can one anticipate a very good long? Well, we're not really in triple bottom conditions. If we were going to look at this as our downtrend, and this wouldn't be on the daily chart, right? This would be something we'd be watching, say, on the 4-hour chart. And this is why it's important to drill down, which we started talking about other things and didn't really get into the drilling down. What a triple bottom would look like then is if we had, this almost had the potential, I suppose, as a triple bottom, right? It came down, it hit the support level once, pulled up, came down, hit it again, pulled up, but now it's broken that level. Triple bottoms can kind of skew a little bit sideways, but honestly, with all of this indecision in here, even in the pullback, it doesn't feel like a triple bottom to me. I know that makes it really, it doesn't feel like a triple bottom. What does that even mean? All I can do is reference my own personal experience. This is one of those situations where I wish I could just download from my head into yours, what it is I'm seeing and why I say the things that I say. But these are the kinds of things that you need to develop for yourself when you're testing. And I know Jeremy's testing. He's actually working really hard. But if we were looking at something like that, Jeremy, let's say that this even did skew and this ended up being a third bottom. All of this indecision in here tells me that even if this were to play out by the rules of a triple bottom, we're not looking at a big enough push to look at it, to be absolutely convinced that it's a total reversal and a good long-term long. What that would mean would be, let's say this bounced right here, and that triple bottom wouldn't even take us up to that next area of support and resistance. I mean, even if we were to tighten this up and grab this mid-range right in here, that wouldn't even give us the oomph to get it past the top of this downward channel. So it might be a good short-term play, but not something that's going to be like, oh, yay, this is the turnaround. So I hope that makes sense. If it doesn't, certainly let me know and I'll see if I can clarify. Let's see, what else did I miss? Oh, Jerry's talking about the testing and practicing your trade. Play with super many lots once you're trading with real money, and it trains your gut. So true. The wonderful thing about the loading of historical data or using a backtesting program is it really does develop the foundational pieces for your own preferences, for what you think you're going to like to trade and the way that you're going to want to trade. But the fact remains that you're not trading with real money yet. And there's a whole other layer added on to your psychology once you engage in trading with real money. And I always encourage people to, before they even go to real money, go from backtesting to paper trading so that you know that your system holds up to the hours that you can trade and the attention that you can give to your trading. Then go from paper trading into micro lot trading and play for pennies a pip. I know that seems stupid and everybody's all gung-ho to make money and they don't want to wait that long. But if you can have the self-discipline to give yourself that experience with real money first, you're going to learn a whole heck of a lot more by staying engaged in your process and testing your system fully than you are going to learn by just blowing a real live account and dealing with the heartache that goes along with that. So devastating to people. Absolutely devastating to people to blow an account, a full money account. Devastating to your trading too. It wreaks havoc, so don't do it. Fuji says, in my opinion, the dollar is trading more on the basis of fundamentals, such as today, the consumer confidence data is strong, then we have a dollar rally. Any thought? Well, it's interesting, isn't it, Fuji? What we are starting to see, and I actually agree with you on this, what we're starting to see is a shift back into normal fundamental conditions, where there for a while, certainly last year, like the last half of last year, all of this year, there was a decoupling. When we had good dollar news, it meant good dollar strength, and then it stopped. It stopped happening, and the story became about risk. And the dollar would actually weaken on good news because people were then willing to take those safe haven dollars and invest them back in the market. And it's interesting to see that we are starting to get that play back, or that fundamental coupling come back into play in the way that the currencies are behaving. I've noticed the exact same thing. Quite honestly, I'm really excited about it because that being able to take a technical trigger off of a fundamental analysis is a wonderful way to make some long-term trading decisions. And I miss being able to trade like that. Prophet says he's seeing a head and shoulders. I just got a ding here. Let's see. Oh, okay, great. Thank you, Maud. Let's see. Andre says, and the body of that area makes sense because the bodies of the sideways range immediately left. Okay, so this is going back to the support and resistance conversation we had later. I know it's redundant sometimes for me to read these comments out loud, but when we're on the recording, I think it's helpful to people who are listening to the recording. So Jerry says, heartache, broken ego, lighter wallet. Yeah, when people blow an account, it's really, really difficult to come back from that. And what people don't understand, what they're putting at risk when they decide to trade regular lots on their retirement account, is that they're putting more at risk than just their money. They're putting at risk everything they feel to be true about themselves. Their belief that they're able, their belief that they can be taught, their belief that they're smart, their belief that they can make the paradigm shift from a job to trading. And when that falls through, all of those things take a huge hit. And that translates into, doubt and guilt and shame in so many areas of people's lives. They start treating family members different. They start treating, it's unbelievable the psychological avalanche that happens after something like that. It's so much more than your money at risk. Please, 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 as you're learning, if you're brand new here, take this process seriously. Give yourself plenty of time, not weeks, months, years, to learn and really be good at this before you put your money on the line. One out of the, I don't even know how many people, 60 people that are here, I don't even know, one of you will do what I'm saying. And the rest of you will go, I should have done what she said. Hardy Stack says, I know that you used 800 simple moving average. What is the most significant time frame that you use it on? And is it valid, or what is the significance on the 15-minute chart? The 800 simple moving average actually seems pretty significant on every chart, every time frame. The shorter time frame you go, the more fake outs you'll get back to it, though. What Hardy Stacks is asking, I do keep on my regular charts an 800 simple moving average that it does act as sort of a home base for the pairs. So when the trend starts to get tired, I start to consider the fact that it might be ready to go back home. I liken it to a college student who needs to go home and do laundry. You know, it's been away for so long, the clothes are smelly and it needs to go back. So as the trend is starting to look tired, I consider the possibility it's going to go back to the 800 simple moving average. What you want to start thinking of in your testing, Hardy Stacks, when you're looking at this, is the shorter time frame you go, the more fake outs back to that 800 simple moving average you'll get. So when the trend starts to look tired on a 15-minute or 5-minute chart, and you're looking at trading counter trend, make sure you're making itty-bitty trades on the way back, because what you'll find, there's lots of opportunities to take 20, 30 pips, and then it'll start to trend again. You don't want to be stuck in a trade you're trying to hold all the way back there on those shorter-term time frames. I hope that makes sense. If it doesn't, let me know. Tom says, yes, Jerry, we have to learn to lose before we can win. That's so true. Thoughtseek says, what exactly is a breakout? A candle halfway on the support line or a candle forming after the support line? For me, generally what I do is I like to take a close beyond that definitive price point I've chosen. And then what I like to do is look for a bounce. If it closes back inside the box, or there's a significant support level back inside the box that it seems like it wants to get back to, it's possible that what I took as a trade was a fake out. Here's a great example, right? This trade made me fearful anyway, because it was bearish candle after bearish candle with no looking back. That's always a good sign that you're going to have a fake out. This close below the box looks pretty good. If I'd taken that trade, I would have taken it with a very small position. And what I'd be looking for on a shorter time frame, I would have moved down to the 1-hour chart. I would have looked for a bounce. I would have looked for it to come back up to that 62.11 mark and then bounce away from it. And then I'd be playing the momentum trades in that direction. So that's what it means to me. There are plenty of people that don't take the close outside the area. They'll wait for the bounce. What that means is they have said to themselves, I prefer to miss out on some good trades, right? Because sometimes things will just leave that box and make a run for it, right? What they're saying to themselves, I prefer to take the safer trade and wait for a bounce and miss some trades than take the fake outs. What they've defined for themselves, if they've made that decision, is that they understand their psychology. Taking that first position is just a little too scary, and they're willing to make an accommodation for that. Say, I'm not going to rule out the trade. I'm just going to wait for a confirmation of that trade. Now, somebody else who has the psychology, if they've not taken the best price possible, they beat themselves up for it. That's the person who's going to take the breakout, set the bounce. So these are all little things, little nuanced things you need to learn about yourself and how they relate to your trading to decide which one of those are you. This would have been a situation right here where the close outside that box was so big. The person who's afraid they're going to miss that opportunity is going to make sure they take that trade. The person who says, wow, that's so huge, there's bound to be a pullback, is going to wait for that pullback and then take that trade. What that might mean is that, that second close is actually below that. They don't get as good of a price. These are all things you have to kind of consider in terms of your own psychology. Fuji says, if the dollar is back kind of trading on a fundamental base, is it going to make it harder or easier for technical analysis? I think it makes it easier. I really do. I think it makes it easier because then the technical analysis makes more sense. You can say the loonie is strengthening because oil is rising. You can say that, producer prices went up. Therefore, retail sales are going to go down based on products becoming more expensive, right? And then you can start to see where people would be willing to play their money and not. If there's a reason behind seeing an uptick in price, it's much easier to make sense of that and start to see a trend developing in price itself. I think it's easier. I'd be surprised if somebody said that it makes it harder. Hardy Stack says, okay, thanks, like on the pound today it stopped and was a dead short. Yeah, remember what we started this session with? This is what we're talking about, low volume, high volatility. You can see immediately how we're just getting that price rejection. It's just too few hands controlling too much money. Ahmed asks again, that means that we have to consider the body and the wicks. Yeah, to a certain degree. You want to make sure that you understand what's going on with price. Now remember, wicks and shadows are actually really quite important. When you get long wicks and you get long shadows, that's really, that's pretty severe price rejection. What that's saying to you is rather than there being kind of this wrestling match like in here with this area of indecision in here, rather than there being this wrestling match between the buyers and the sellers, what happened instead is that the buyers ran price quickly and the sellers said, you're not doing that, and quickly took control. When that happens, that subsequent move can hold quite a lot of conviction because the buyers have, the opposite side has wrested control back. So they're important to keep in mind. You never want to discount them. But because support and resistance is more of a zone than a specific price point, at some point you have to make a decision what's going to be important to you, bodies or wicks. Tom says running stop is easy money for brokers. I suppose I happen to be one of those people that I don't believe that brokers just run the stops on retail traders. I know it can feel that way sometimes, but I don't think our tiny little accounts are going to matter much to them when they've got this big money, that they can make much more money off of. But I also have a tendency to be the person that even if that weren't true, I'm still responsible for the conditions that I'm willing to trade in, and that includes my money management, that includes my stop placement, that includes how I want to trade when I've got a small lot on versus a large lot, all of those things. And I just find that it doesn't do me a whole lot of good to point the finger somewhere else because I can't control it. Even if that were true, I can't control that. So I'd much more look for the ways that empower me than the ways that deplete me. Ahmed says for breakouts, we have to consider the preformed candles, wick, or body. Yeah, you have to consider them both, absolutely. What you have to do is say, at some point, you have to define for yourself what that definitive price point is. What is the area that I say, okay, a move beyond this price means I'm in this trade, and then make your decision from there. Jerry says the money's too big in these markets, even when thin. So true. So true. Okay. Mike says, Triff, long-term pound-dollar consolidation approximately 160 to 170. I can't see any change. Do you have a long-term opinion? I actually think we're going to see pound strength again, but that's, yeah, that's my opinion overall. I really think that this little blip down here, oh, I took off my auto scroll, sorry, is losing conviction. I think it thinned out. As soon as it started pulling down, it started to thin out, and I think that's the sign that things are going to go long. If we're looking back down to the hourly chart, because I'm talking about how I drill down, and we haven't even gotten down to the drilling down part. Clearly, the area of indecision kind of does become this little muddy area that we're in right now. This is one of those situations where if you're trading in thin markets like we have, thin market conditions like we have today, which I'm not. I need to be clear with you guys. I'm not taking any new trades this week. Simply because the low volume, high volatility conditions are not conducive to the way I like to trade. But this close on the hourly candle might have been a trigger for me to go ahead and take a small short position. Then the next thing I'd be watching for to confirm that I was right would be a bounce up to this level, or at least near this level. You can kind of see there's, inside of this area of indecision, here's our muddy area, right? So it wouldn't be this exact price point. What I'd be watching for is something that would show that it was pulling back to this level and then bouncing back short again, bouncing back away. That would be a confirmation to me that the short was the direction the market had chosen, and that would signal that I was in the right trade at the right time, and I'd start building on that winner. Tom says, we'll have to agree to disagree, Jerry. I love it. Fuji says, what if you're trading with a small broker firm? Isn't it that you're at the mercy of your broker? Yeah, but even still, and maybe you are, like I said, again, even if I'm wrong, I really don't. Even if I'm wrong, though, it's not something we can control. So as long as it's not something, if I can't control the actions of my broker, I'm not going to spend a lot of my time and energy there because it's going to deplete me. I'm going to get frustrated. And let me tell you, trading is frustrating enough. I've got my own frustration. I don't need to go borrowing trouble, right? So I'm going to make sure that what I do it works around that. If I felt like I had a broker, if I felt like I had a broker, for some reason I felt stuck to this. First of all, if I felt like I had a broker I couldn't trust, I wouldn't be with that broker anyway. I love my broker. I totally trust my broker. But if I didn't trust my broker, A, I would change brokers. B, if I felt like I was married to that broker for one reason or another, I would start to consider in my trading what are possibilities. If I felt like they were running my stops, what are my possibilities? Well, the first thing that comes to mind is open a trade without a stop. It's terrifying, right? Nobody wants to really do that, especially if you're brand new. You want to try to minimize those losses. But what if you used a sub-account and you took the amount you were willing to lose and you put that amount into your sub-account, and you took a tiny little position that wasn't going to make you run out of margin or anything that you could put on without a stop? Then the broker can run other people's stops. It can do whatever they want to do. You're not going to get whipsawed in and out of this trade. And by the time money moves the direction that you want it to move again, you have a trade online, and you can start to build on that without putting any more money at risk than you were willing to put it in the first place. You have options. Sometimes it takes some creativity. Sometimes you have to think a little bit differently. What happens is with new traders is that they get so locked into, if I'm willing to risk 1%, that full 1% goes on in the very beginning and it comes off at the end of the trade, period. And there's no negotiating room in there at all. And it's not that new traders aren't willing to negotiate. It's just that It doesn't occur to them to. Like, a trade is on or it's off. It's binary. That's it. However, after you've gained some experience, you start to shift your focus from how you're understanding the charts to how you can understand your trading. Then you start to get creative. Then you go, oh my gosh, I can do it this way. I can try it that way. I can experiment with this. And that's what's going to take that's what's going to continue to take your trading to every new level. Ahmed says, which is the best combination of indicators? I don't know that there's a best for everyone. I think that indicators, are lagging, Ahmed. I want you to remember that. They're only retrospective. They can only tell you what has happened with price up to this point. They're not predictive in any way, shape, or form. You can perceive them that way, and you can develop, trading systems with that assumption, but that's not really what they are. Everything is every indicator you're going to put on your chart has to do with historical price. The reason why, even though I use an 800 simple moving average on my regular charts, the reason why I don't talk about it in these webinars is what I feel is most important for my students to understand before they start messing around with anything else is understanding what price is telling them. If you're looking at something like this and you're seeing, yeah, we've got bearish moves, but they're all undecided, I want you to understand the importance of that. I want you to recognize that as potential fizzling out of the trend. I want you to put a story behind price so that you can understand what the money makers, what the market makers are doing in their decision-making process. That's what's most important. Anything else you're going to put on your charts should act as a tool to your trading, in my opinion, and not a trading system itself. Fantastic question. Thank you. Andre says, interesting psychological point. Do you agree with the concept of a psychological stop in terms of your money management? Sure. Yeah. I use conditional stops on my first 2 to 3 positions where I won't put a hard stop in, as long as I'm going to be at my computer, where I won't put a hard stop in, but I'll say, okay, if this closes above this area, I'm back out of the trade. Because what I want to do, especially during high volume times, when there might be a lot of whipsaw or there's a news announcement coming out, when things can really shove one direction before going the other way. I don't want to get caught up in that, so I wait for a close instead of being stopped out on the wick and stuff like that. So, but it takes a lot of self-discipline, Andre, and I have met traders and I have worked with traders who can't do that. They just simply do not have the self-discipline to do it, and that's okay. What we do is develop a system for them that they can trade. Okay, Jerry and Tom are having a conversation. Harley says, I use stops primarily catastrophic. Internet failure or platform failure can be big losses, fear. Good point. And it's funny you use the word catastrophic because I used to say, my catastrophic stop loss is here. However, if it does this, then I'm out. So I had a conditional and a catastrophic stop loss. And yeah, because you don't want to be in a situation where you don't have internet access and you have no control over your account, which, if you have a good broker, they'll have a desk and you can call them. There are a couple brokers out there that don't have trading desks, and that's very frustrating. Let's see. Tom and Jerry are still having Tom and Jerry. Have I already said that and I didn't clue into the Tom and Jerry reference, or did I say Jerry and Tom? That's funny. I just said it in the order that Tom and Jerry, like the those of you who aren't from the States, you might not know, but there's a cartoon called Tom and Jerry. It's a cat and mouse. And so now there's Tom and Jerry and they're having a discussion. So I'm sorry. I'm easily distracted. My husband says I have OPB. It's, pretty butterfly. Oh, so there we go. Let's see. So that's that discussion. Okay. Fuji says, when the Aussie dollar doesn't have any news in the calendar and with the dollar strong today, why is the Aussie dollar up? Can we please see the chart? I don't know, Fuji. It might have to do with gold. I haven't really checked. I probably should have because I knew I was doing this, but since I'm not trading this week, I'm just simply not that engaged. Hamid says, I know the physical stop. What exactly is the psychological stop loss? A psychological stop loss would be when, well, let's just use this trade for example. Hamid, let's say that you took a short on this. You didn't want to put in a hard stop yet. You wanted to give this some time to move. A psychological stop loss might be, your hard stop loss maybe is outside of this box, maybe at 1.6072, we'll just say. Just throwing out an example. But you might say, that's just in case everything goes horribly wrong and I don't catch it. But to myself, what I'm willing to do is cut that loss off even shorter if I get a close back above my trigger line at 1.5925. This is 26. I usually, So that would be your psychological stop loss. Another might be a close above that, maybe not on the 1 hour chart, but on the 4 hour chart, just to give it time to kind of massage itself back into a zone that makes sense for what a bounce might look like. That's the two different ones. Jerry's asking for the euro pound or the euro yen. We are very quickly running out of time, and I think I told Mike I'd look at the euro dollar. So I want to make sure that we do that. Who's my broker? GFT. Really like them. Okay, great, excellent. I'm glad that's all making sense. Okay, let's take a look at the euro dollar. I have to unshare the chart or else you won't get my new chart clearly. It'll cut stuff off. And then reshare. So let's start again. Let's just really quickly look. Well, let's put this into a larger context. We had we talked about this last week too, didn't we? Actually, the last couple weeks on the euro dollar, we talked about the fact that this really had a strong run, and you can see how we had these nice wide swings, and then the trend started to look a little tired. The swings got tighter and tighter. Little fake out here, some price rejection at the similar levels. This is all telling a story. This is what you have to wrap your head around to understand what's going on with price. And then we talked about the fact that if this was going to break below this price, we had an area back here that it could potentially leave. This, I have it labeled an important area or important level. 1.4371, I'm going to take my scroll off. This was the top of the long-term consolidation area. The more hits you have on your longer-term charts of an area where there was an area of indecision, the more significant that level is, and the more likely it is that when things get tired, price comes back to there. Incidentally, that very often lines up with the 800 simple moving average, which I haven't looked. Let's take a look. Let's just throw on the 800 simple moving average. Let's just see for just as an example. Look at that, pretty dang close. This is that coming back to home base that I was talking about, that Hardy Stacks asked about why I have an 800 simple moving average and does it work on the differing time groups. This is that, things get tired and they come back. This is what we're talking about. And I just opened a whole new can of worms by putting that on my charts. I know I did. I'm sorry. Oh no, I want to take it off. There we go. Harley says, do you use their deal book charting or different charting? I use the MetaTrader. It has bells and whistles on it that I like that the deal book doesn't have. So, but it's nice to have the deal book too, because if something goes wrong with this feed or something, I have another option. There's nothing wrong with their charts. They have really good charts. I just like being able to draw my boxes, and I don't know. They're just little things. So anyway, so euro dollar. Let's take a look. Now what we do have here is we have a close below this muddy area right at this resistance level, former resistance, now support, right? What we're looking at now that it's actually closed below that area, the next question is this going to maintain the momentum it needs to keep going southward? That's the question. That's what we're asking ourselves, right? We've got a close below significant area. What's important here is now, and we have to keep trading conditions in mind because we haven't had a lot of volume. It's been, the end of the year, holiday stuff, there's lots of reasons. But what price is telling us is that even in even with the chance of low volume, high volatility conditions, what we're still seeing here is a lot of indecision. So that's telling me that a price rejection is not only possible, but probable, right? The other side of that coin is, with this having come down and closed below here, climbed back up to this resistance level, the other possibility is a bounce. I'm not going to get excited about this until I see a bounce, simply because we have a lot of bearish activity with very little pullback. This has pretty much come back to home base, right? Even almost to that 800 simple moving average. Hardy, even when I'm looking at the 800 simple moving average, it's never my profit target. Support resistance is king to me. So even though when I'm looking at that counter trend play back, I will always find a support resistance area close to it to start to play off of. And generally speaking, that support and resistance area will give me time to make another choice. Like a new area of indecision, and set up another trade idea and that sort of thing. So, it looks to me that with all of this bearish action here, this happened very quickly for the euro dollar. It really did. This is not typical behavior for the euro dollar. What is typical is this, sideways movement, little break, immediate sideways movement, little break. Well, like it happened here, right? I mean, gradual movements is typical for the euro dollar, not this. So that tells me that we have some correctional movement ahead of us that gives me a bias to the long. Now, even though I have that bias, what's important for me as a trader is I have to say to myself, this is a bias. That's all it is. It's not a sure thing. It's not an absolute 100% guarantee that that's what's going to happen. Saying that to myself prepares me for the next possibility that this was a break, this is the retest, and a bounce away from that means we've got more movement coming to the south side. Yay! Mike's learned something new. Mike says, tired out, price action, fizzling out, I've learned something new. Fantastic. That makes me happy. I'm glad that you told me that. Hardy says, how about a key level on the larger time frame? Same thing. If you're talking support and resistance, I mean, this is what we're talking about. This is why I label these, these larger important levels, these retracement levels. Because even though I trade on the 1 hour chart, I want to remember the context of the longer time frame. Very much the same thing. Hardy, very much. Yeah, for the 800 simple moving average, yeah. I mean, the whole point is that you're looking, when things get tired, where's a possible place for this to come back and take a rest? When is the college student of the price action going to do its laundry, and pull back that price? So, yeah, you're welcome. Absolutely, you're welcome. Tom says, I'm glad I didn't open my charts today. Too frustrating. Yeah, these are not great trading conditions. So let's just drill down real quick. Oh, I'm surprised Maud's not yelling at, actually Maud's, somebody else is here. I forgot who. I'm sorry. I'm surprised I'm not getting told to leave. So coming down here to the 4 hour chart really gives us a whole new perspective on this price, because what are we seeing? Right around this important level, we're seeing an area of indecision form, aren't we? Where we got our first big swing. What am I expecting next? For those of you who have been here with me for a long time, go ahead, type it in. What am I expecting next? We've got a big swing. What am I watching for next? Do you remember? I say this almost every week. It must drive everyone crazy. After these big swings, inside these areas of indecision, we immediately get a tightening up action. And this gives us a second area to start to watch for, to make decisions on. Consolidation, that's right, Mike, exactly. Big swings and then a tightening up, a triangulation, right? And then next, as Hardy says, a break of the muddy area. That's exactly right. What we start to watch for, this becomes that definitive movement. The market puts on the brakes. You can hear the screeching. I mean, gosh, look at this. Conviction, we've got conviction, pause, conviction, pause, conviction, pause. Not so convicted. Definitely pausing. There goes the brakes right there. We've lost all of that conviction in the short side. What are we picking up in the long side? A little more conviction. And then we've got all the sides of movement going, I don't know. The market's shrugging. I don't know. We're pressing the, I don't know. Let's wait and see. And as all of that big money kind of waits and see, this starts to go sideways, right? It all starts to give us a really great chance to make decisions on our trading. Again, I'm not going to be trading this week. Low volume, high volatility, or bad conditions for my type of trading. But in regular conditions, this area right in here, where I put that white box around it, and now it's fudged out my yellow box, and it looks like I made some really neat little pattern. 144.32 to 143.20, that becomes the important area to me that I'm willing to make decisions on. A break below that, just play it to the outside of that larger box. No big deal. You could actually, even if you want to be a little more conservative, Ahmed might be looking at this going, this time you grabbed the wick. What the heck? Cut the difference. Grab a few pips out of this next move, right? Close below that. Well, then it's closed below its larger area of indecision. Then you've got a bigger decision that was just made by the marketplace. Prophet says, taking down quick to stop people. I think I'm getting confused by the wording here. Taking down quick to stop people getting a good price for a short, hence going to take it lower. Oh, I don't know. In these conditions this week, this could just be some big money dealer that right now, no, I don't have anything. I have no prediction on that right now at all. Harley says, good advice not to trade. Too much risk? Yeah. These just are not great trading conditions, and that has to be okay. If you're the kind of person who is feeling like you have to trade all the time, you need to come up with some workarounds around that psychology to keep your money safe. Ahmed said, is the mid-level plays important? Is it that the mid-level plays important role in support and resistance? Well, really what I'm saying, Ahmed, is that eventually you have to make a decision. If support and resistance is a zone, at some point you have to draw a line in the sand and say, I'm willing to take a trade beyond this point or at this point, or when it does this at this point. There has to ultimately be a price point that is your line in the sand. For me, that's the difference between the two. But, test it. You might come to a completely different conclusion. My goal in having these conversations with you guys is not that I want you to learn to trade like I trade. I want to give you some things to work with so that you can learn how to trade the way that you trade best. Because the truth be told, you'll never trade the way that I trade. Jerry will never trade the way that Tom trades. It's just, that's just the way it is. We're snowflakes. Ron says, have you ever written a book or a trading course? What I do, Ron, is very different in my trading or in my training. Yes, I do teach. I teach in small groups. It's called the Trader Development Course. And rather than try to teach you, exactly what I just said, rather than try to teach you exactly how I trade or teach you a system, I help you develop a system that is absolutely custom made to you, your psychology, your fears, your doubts, your experience, the way that you read the charts, and I work people through the process that it takes to be present enough in their own psychology to recognize those things in the first place, and then work past them to trade well in the long term in any conditions through their own frame of reference. That's what I do. And let me put my website up here. The website is a little clunky. I'm working with somebody on that over the break. But if you go to the training page, there's some information about the Trader Development Course. And in fact, the next class starts on Monday. So That's the way I teach. Let's see. Mike says, Triff, ever thought of a career as a cartoon narrator with your ooh and er? I have thought of that. I would love to do that. I've always thought that would be so much fun to do cartoon voices. Profit says, have the target below the last pound dollar. Actually, this is the euro dollar I think we're looking at. But Profit, we did talk about, and this is being recorded, so if you missed the first part of this, we did talk about the pound dollar and where it might be headed if it continues to go short. So by all means, feel free to look at the recording. Is it used to trade at mid-levels? Is this preferable? It's preferable for me, Ahmed. Absolutely. Yeah. Jerry says, I think Triff teaches reading the charts, tactics, and strategy. Thank you, Jerry. Yeah, that's what I try to do, exactly. Yeah, Jerry's been a student of mine for a long time, and he's worked really hard. It's great. I love seeing my students show up here. Thank you. It's awesome. But yeah, here we are at the top of the new hour, and I haven't been kicked off yet. Can you believe it? So I will go ahead and just wrap things up. I want to thank everybody for being here. I know that this is a difficult week to trade and a really good chance for you to kind of take this opportunity and approach your own learning process again. Really spend some time in your learning process. I hope that means some back testing for you. I hope that what I give you in these webinars is something that is meaningful for you in the ways that you can trade. Thanks for being here. Thank you to everyone at FX Street who allows me to be here every single week. I wish you all the absolute best in 2010. I will be back here next Tuesday, same bat time, same bat channel. And, oh, Sue, I didn't know you were here. You're quiet little baby. It's good to see you again. Nice to see you. Matthias, that's who it was. Thank you for filling in for Maud as she had to step away and all of your hard work at FX Street. You guys are awesome. Thanks, everybody. Have a great week. I'll see you next year. Can you believe 2010? How the heck did that happen? Goodbye, everyone. Be good to yourself. Bye-bye.